Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Tuesday, May 14th, 5:15 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Public service announcement before I get started. I will be a guest on IBD Live this Friday morning, May 17th. And it is a subscription, and we will not be able to post it to our website. But if you're interested, I watch IBD Live. I've watched it basically every day since it started. It is a great way to reinforce the rules and keep good habits tied to sticking with leading stocks and market uptrends. They do have a great trial, 3 months for $9.95. Just search for IBD Live. Click that link and it'll say subscribe, 3 months for $9.95. Great way to get uh, familiar with IBD Live. And hey, who wouldn't want to spend $10 for a morning with me for 2 hours, right? Anyway, okay, let's dive into it now. State of the market. We're in an uptrend. You can see the trend gauge over here. We've got the coveted 4 green arrows. Market leaders, they really flared their nostrils today and bullishly supporting the approach that we take to the markets, buying leaders in market uptrends, also keeping a core exposure to the S&P 500. All 5 of the major indexes are trending above all 3 timeframes that we track. That's the short-term 21-day exponential moving average, the medium-term 50-day moving average, the long-term 200-day moving average. So expectations of a quiet day today because of PPI in the morning, CPI, which is more important because that's consumer price inflation. PPI is producer inflation. And things were quiet for about 30 minutes. PPI before the open came in, it seemed like it was hotter than normal, but if you dug into the details, yes, this last month was above expectations, but prior months were revised lower. The year over year came in line, and apparently a pretty big number, which is healthcare services, actually dropped. That's supposedly Jerome Powell, something Jerome Powell watches closely. And on the heels of that PPI report, he had in Amsterdam a speech and took some questions. And they asked him about PPI, and he said, I don't think it was hot. I think it was mixed. There was a lot of market volatility between 10 and around 11:30. The market sold off, but a strong afternoon rally gave us these nice green numbers, and really out of the gate today, despite the indexes being weak or on the weak side, leaders were doing their job. Here are the final numbers. Our 21 over 21 leaders list up an average of 1.53%, 19 up, only 2 down. The big 8 up an average of 0.88%. The RG8, this is our 8 growth ETF composite, up 1.05%. S&P 500 was down about a quarter, a third of a percent immediately after PPI. It kind of plunged, but it bounced back, opened flat, sold off. But again, the nice rally in the afternoon, giving it a 0.5% gain on the day. Equal weight up 0.4. NASDAQ 100 up 0.64. Equal weight NASDAQ 100 up 0.4. Dow up a third of a percent. Mid caps up 1%. Russell 2000 up 1.14%. Global diversified 60/40 stock and bond up 0.38%. In-house GROTECTION, our flagship portfolio, up 1.08%. Leaders did their job today. As I mentioned, we'll take a look at some of those charts when we get to the tail of the tape. And let's get right into it. And we will start with the S&P 500 here. Let me get situated here. Okay, here's the S&P 500. Let's go to a 15-minute chart. And the volatility really doesn't show on here, but what we've been focused on is this move up off the last Fed meeting. a bull flag that formed for about a day and a half, a breakout above that level, and we've been holding that level. Now we had a gap up on Friday, faded a bit, gap up on Monday, faded a bit, opened flat today, volatility in the morning with Powell, and then the nice trend up in the afternoon, breaking above this 5240-ish level that had acted as resistance Friday and Monday. And if you look at, let's look at a 5-minute chart, you can see the intraday volatility that we had here, then the sell-off before the strong rally taking us within a stone's throw of all-time highs. At 52.65 was the all-time high. The all-time high close about 10 points below there, and we're bumping right up against that with CPI before the open tomorrow morning. So we'll see how that number comes out, and then more importantly, see how the market reacts to that number. But certainly a positive day today heading into that. That's the S&P 500, NASDAQ 100. Same situation, making a higher high after two tight closes with a rally in the afternoon, volatility in the morning. Volume has been higher on the indexes. In fact, the NASDAQ composite did make an all-time high today, while the NASDAQ 100 has not. But volume has been extremely high because of the resurgence of meme stocks, namely GameStop and AMC trading massive. I'm not even going to show their charts. That's gambling. It's not investing. But they've been trading massive amounts and skewing the overall volume on the indexes. So that's the reason for that anyway. Here's the Dow, also up on the day, 1/3%. Mid cap 400, the S&P 400 mid cap index. There you are. Also up on the day after 2 down days, closing above that 3,000 level, and again within shouting distance of the highs from a month ago. Russell 2000 small caps up on the day, coming into this 2,800 level. Russell still quite a way off of all-time highs here. As you can see, in the relative strength has been not so good for the Russell over the last few years. Let's go back to mid caps very quickly, see where they are relative to all-time highs. They're making all-time highs. Let's also look at the S&P 600 small cap. That's closer to all-time highs than the Russell 2000. This has a better quality of small cap in it as to be in the S&P 500, 600 indexes. All the S&P indexes, for that matter, they've got to be profitable companies. So those are the 5 major indexes. Let's go to the VIX. VIX was lower today after the pop yesterday, below that 16 level, which is where we want it. The US dollar, outside negative reversal to the downside today, down 0.20%. Can't get back above this declining 21-day moving average, and that's just fine as far as stocks are concerned. Precious metals also, gold up 0.85%. Today, gold stocks up 1.3, silver up 1.3, Bitcoin not so fortunate. Can't stay above this declining 21-day moving average, down 2.6% on the day. On to bonds, the broad bond index. Let's bring up bonds so you can see how they initially prices gapped up today, sold off a little bit. Rallied into the afternoon before pulling back. So if prices were up, that means yields down slightly. There's the broad bond index, the long bond TLT price also up. TYX, the yield dropped outside negative reversal, down 0.63%. And the TNX, the 10-year, down 0.80%. That's our inter-asset correlation set of charts. Let's go to the tail of the tape. You can pause it. I'll hit the highlights. So here was the PPI, hotter than expected, but as I mentioned, previously revised lower, healthcare services lower, CPI in the morning. We've been up 7 out of the last 9 sessions. The SPY actually closing 9 out of 9 because the Sometimes we're off by a couple hundredths of a percent between the SPY and the S&P, depending on exactly where it closes. But technically, the S&P up 7 out of 9. 9 above the 8-day exponential moving average, 8 days above the 21-day. You can see these all-time high resistance levels that the S&P 500 and the NASDAQ 100 are coming into. As far as sectors go, strength in retail, biotech, regional banks, copper, jets, and gold, silver, and gold and silver stocks. To the downside, Bitcoin, staples, transports, and Chinese internet, KWeb. In our portfolio today, two small adds to Pure Storage and CEG, slightly raising our adjusted beta. Bottom line on the day, despite hot mixed PPI, leaders and indexes were solidly green. We'll see what CPI in the morning has to say about that. And let's go to some charts now. And we'll go to the 21 over 21 and start off with what we own. All of our holdings are above their 21-day moving average. And we'll start off with the only one down on the day. That was First Solar. This gapped up in the morning and then sold down. There was some news of insider selling that hit the stock, but it bounced right where it needed to at the 21-day moving average. Closed off of that level, but down 1.4% on the day. Things get better from there. Freeport breaking out, up 2.8%. Constellation, we added to this, up 2% on the day. VRT, our second largest holding, undercutting and reclaiming the 8-day moving average, up 4.2%, coming into that Livermore 100 level. GDX up 1.3% on the day. Kava, after a tough down day yesterday, regaining it back to by 2.8%. NVIDIA up 1%. Micron up 1.5%. Pure Storage added to this today. Double bottom breakout on above average volume, up 3.8%. CrowdStrike, our largest holding, up 3.3% on the day. Apparently, there was a AI conference going on, and a lot of good things came out of it for CrowdStrike. And you can see the volume recently on this, volume patterns over the last 2 weeks. This is what got our attention and got us into it. It was out of nowhere. It had been lagging on a relative basis. Then 2 days of volume into the 50-day moving average where it failed, not a surprise. Pulled back a bit. Often the first test of a declining moving average is a failure, but very good action in this over the last 2.5 weeks. This volume was initially what got our attention to it, and solidly profitable on both of our 3% buys on this. Carrier up 1%. Let's show what was down on the day today. Down on the day today, just First Solar, as we mentioned, and APP. Apparently, there's a large insider trying to dump a block, and you can see the above average volume today, but this was down, but it bounced right at the 8-day exponential moving average, which is what you want it to do. So those are that's the portfolio overview. Let's take a look at a couple of other names of note. ONON, growth name, reported earnings, and that's a big, nice performance, up 18% on 381 above average volume. This trade very choppy, as you'll notice. In fact, down hard on 4 straight days before earnings, but clearing that 35 level, and the volume was there, as I said. SE, this is in the 21 over 21 list. This had a wild day. Look at this 5-minute chart. Initially gapped up, sold off hard, recovered even harder, sold off again, then sideways into the close. You see, very typical on earnings days. The algos want to take out the stops to the upside and the downside, and you can see they very clearly did that. Let's look at a 15-minute chart. You can see breaking below yesterday's lows. How many people had stops set there? If they did, the algos came and got them. On the upside, how many people had buy stops above the most recent highs? The algos came and got them. Shook everybody out and closed somewhere in the middle. So now we've got a high and a low reference point. And we'll see one of these directions will win. We don't make predictions, but we know we've got solid fundamentals on SE, solid chart pattern, good volume patterns, and we'll see how it plays out. Plain and simple. Two other recent earnings, SG, Sweet Green. You can see the big gap up last week. Two nice inside days after that gap up. Consolidation, lower volume, just what you want to see. Very nice fundamentals. They're not profitable, but they're losing less as time passes, and in a very strong group. Restaurants have been acting extremely well. What else do we want to point out today? Abercrombie and Fitch also in the 21 over 21 continues to show relative strength as it fills out the right side of this flat base, up 3% on the day. It was a good day for AI data center names. SMCI can't quite get through this declining 21-day moving average. If it does, that'll be a change in character. As you can see over the last 3 weeks, that level has acted as resistance since its big sell-off on earnings. And Dell, another data center server company, challenging highs there, up 2.4% on the day. It's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, my partner can be reached, Dan Stewart, dan@revereasset.com. Our flagship portfolio is named GROTECTION. It's designed to grow assets in uptrends, protect them during downtrends. It's a common sense approach. It applies to every other aspect of your life. If something's going wrong, you make changes to fix it. Some asset managers out there don't agree with that. That's because they're not technical based and can't tell what's up or down in a healthy or unhealthy market. But we think we've proven by going on video every night and giving our opinion on the market that we can tell what's up and what's down. And if you're interested in this approach, we'd love for you to reach out to us. And with that, I'll wrap it for Tuesday, May 14th. This is Don Vandenbord with Revere Asset Management, reminding you it's not how much you make in the markets, it's how much of that you can keep. Thanks for listening, and have a great day.